Oh, okay. So for your, like, let's say hospitalization, all this is mostly under AIA, Prudential. Oh, NTUC income, I see. All the while lah, for your whole family. Oh, I see. That's why it's like someone who we all know for a very long time, like a long time friend, like your I see. Same for me, because I think mine also, like my parents were like quite close with their GE agent. So my whole family one is all under Great Eastern. Yeah. Yeah. So for OCBC Group itself, right, we also have the OCBC Bank, which is the banking services, and of course, Bank of Singapore for private banking and the OCBC Securities for trading itself. Do you use any of our OCBC facilities? Mainly OCBC banking, not so much on the trading platform or this. So for yourself, do you use UOB? For yourself, do you do any forms of like savings or wealth accumulation? Mainly Singapore saving bonds? Oh, USB bond.
Do you do equity also? By the way, like stocks. Also, you are more like a low risk kind of person. You like to go into per se. Okay, okay. I think fair enough. Yeah.
I
So for yourself, I mean, because you are also quite young, about 30, 33, 34, right?
before.
So basically for yourself, your portfolio, I would say, is mainly into bonds as what your parents' philosophy is. And then I would say maybe some of them in the savings account, something like that. So these two places. Okay, okay. So never thought of going equity, or you went before, but maybe don't really like it because it's too volatile. How do you feel it is overall?
Oh.
Okay. Got it. Got it. So even though that equities has a bit of higher returns, you felt that that is something that you don't really understand, and then you don't want to go in. Oh, okay. Basically, right? Equity is called like basically you can call it 股票 lah. So that's like stocks. Yeah. So be it stocks. Usually we see it as companies lah. So typically, I think bonds are pretty good. For something that is quite stable. Let's say we are getting about 4%. In fact, we have one of our bond offering, right, offering about 6 to 6.5%. Okay, but of course, if you are no problem. Okay, so we do have a bond that's offering about 6 to 6.5%, but equity, the returns are about 10 to about 50%. So typically, the returns for equity, right, is actually pretty okay. And I'll say, in fact, it is a lot more than USD bonds. Let's say USD bonds are taking about 5-6%. Equity is about 3 times more the returns lah. So talk about 15%. So last year we did about for our equity, we did about 30+%. The year previously we did about close to 30% now. Yeah, okay. So right, in terms of equity, I think there is a resounding opportunity, especially if you are young and you have a longer runway lah. But definitely for your parents, I believe they are in their 50s to 60. I think bond is a very good component in their portfolio as well. Yeah. Yeah, no problem. Do you need to attend to something or okay, okay, yeah. Yeah, okay. So okay, so today, right? I mean, of course, by you coming into this meeting, I think, of course, I think you also shared with Miao Chun that I think there is a RM that is dedicated to you, that's assisting you with all these investment decisions. But of course, what we want to share with you is, right, I think number one is thank you for giving the chance to us, even though you haven't met us, to actually do this Zoom session with us. I think that's number one, the number one thing that we want to thank you for. Okay, but of course, today, right, in exchange for the time that you invested in us by coming into this Zoom with us, right, for the next I would say 15 minutes. Okay, for these 30 minutes as a whole, we also want to provide something of value to you of how you can, as a 34 years old, by the time that you are perhaps about 50, right, we can really exponentially grow that wealth for you in a very controlled kind of manner. So in a way, I'm not talking about those kind of crypto returns whereby you 50 100%, or those stocks kind of like 50% in a single year. We are not going to do that. But of course, we want to pin you some expectation that we can protect the downside. And yet at the same time, we can give you about a 10 to 15%, which is a lot more than what bonds are providing. So that is basically what our expertise is, and of course what we want to have you take away from this session itself. So for us wise, like what Miao has shared with you, we in the whole team, right? Of course, the branch is huge, okay, but in the whole team, we manage about 80 million in assets, and the whole company, right, we handle about 16 billion in assets. So basically, I think in the whole team itself, had 80 million, and we built this up about 7 years ago until today. I think it's quite a good amount. I think the capital that clients put in are about 30 to 40,000 from the last 5 years. We built up to about 80 million. So how we handle things is, of course, we want to look at downside protection, because 80 million, right, for our clients, right, if it's a plus up and down 10%, right, it's 80 million move. Sorry, it's 8 million move. We try not to have too much downside for the clients, but of course at the same time, we want to get clients sufficient upside. If not, they take the risk. There is no meaning if the risk is too, if the rewards is too little. So what we're going to show you, in fact, right, is two things. Number one, the structure that our clients can participate. Okay, you can go as low as, example, $400, $500. Of course, you can scale up to $1,000 per month. Okay, so it's very affordable. Of course, if you feel that this is good, then later we will share a little bit more in detail about. So I think one thing is the structure itself. How could this lead you to 2x, 3x your money in a very controlled manner in X amount of time? So that's number one. And number two, right, then we will be sharing about how we are going to do it, example, which sectors we are going into, because example, there's like what you say, like, I don't understand equity, because there's China, there's India, there's real estate, there's Europe, there's so many, right? So we will do the handling for you. So, but of course, we will provide to you, okay, what are the main 3 to 5 reasons why we are going into this sector. So example, all our clients, right, have the choice to have 10 sectors. But of course, if you have 10 sectors, right, then it defeats the purpose, because it shows our incompetency in identifying the right place to go in. So usually we'll tell our clients, at most you have 2 areas to go in. That is the most, because we do our analysis. This is the place that you want to go in, and that's the ways that you want to make a good return. And typically, we will tell our clients to do what we call a dollar cost, which means to say they can go monthly mode or quarterly or even annually. So example, should the prices go down, we can buy it at a cheaper price. So those are a few strategies to help you reduce your risk, and yet at the same time, we can get sufficient return. So maybe at this moment, right, we are keeping note of the time. We try to keep it between by about 10:30, 10:35. We will try to end this call, because I know your parents are with you. Maybe they want to talk to you, or you're busy. So we'll try to keep it brief. So maybe for the first, I would say for the next about 5 to 7 minutes, Miao Chun will share with you how the account works. I think that's the structure, right? So that's number one. Then second, right, I'll be I will be sharing the funds or the sectors that we are going into, and that will help you to understand, basically what are the values that we can provide to clients. Okay, so Miao Chun, right, maybe you can share with Jamie, how does this work? Then of course, Jamie, you have any questions, feel free to let us know. Maybe you can keep it to the end of Miao Chun's presentation, and we'll just answer your question all at one shot.
Yeah. Okay. So basically, Jamie, you can see this blank white screen in front of you, right? So for this account itself, you can actually open for as long as you want, up to a lifetime also can. But it doesn't mean that you have to keep on putting money inside this account. So what you can do actually is just to put inside for about 10 years. So let me share with you how it can be done. So for example, right, most of our clients actually put in with us 12,000 a year, 1,000 a month, right, for a period of 10 years. So this amount, right, can be higher. It can also be lower. It is very, very flexible, totally up to you itself. So let's say based on this example, right, of 12,000 a year, 1,000 a month. So of course, let's say you think all these are customizable, it can be higher, lower the time also. So based on this example, right, there will be a total of 120,000 inside this account already. So based on 8%, right, on the 10-year mark, this account value will grow up to about 170,000. So what it means is that over these 10 years, right, you have made a total of $50,000. So 50,000 divided by 10 is 5,000. So every year when you put in 12,000, you're getting back 5,000 itself. So this is a simple profit of 42%, which is possible because of compounding effect. Right, so at this point of time, right, there are a few things that you can do with this account, right? So firstly, you can choose to withdraw everything, then the account will close already since there's no more money inside. But of course, Jamie, you might tell me, hey, Miao Chun, I think this 8% is pretty not bad. Can I just withdraw, say, 50,000 or 100,000 to make some purchases that I need? Then I leave the remaining inside for it to just continue to compound and grow. Is that possible? Yes, this is what we call a partial withdrawal. Minimally, right, you just need to leave 5,000 inside this account to keep it active. So of course, some clients may already have all their savings planned out already. They do not need this amount of money at this point of time lah. So they can choose to leave everything inside the account and let it grow for another, say, 5 more years, right? This account value will grow up to about 250,000, which is 2 times of what you put in already. So of course, in between these 5 years, anytime you feel that you need to make any withdrawal, also can. But let's say you still don't need this, right? You leave it inside for another 5 more years, it will grow up to about 1/3 of a million, which is 3 times of what you put in already. Yeah. So at this point of time, right, you might feel like, you want to do something to reward yourself. So let me share with you, right, some of the more popular options that our clients choose to do. So for example, a lot of them actually choose to go on their dream luxurious holiday, like 1 to 2 weeks at London, or go to Maldives, or any bucket list that they wish to check off lah. So for Jamie yourself, is there any bucket list for you? Do you have any bucket list that you hope to achieve? But in terms of traveling wise, is there any place that you love traveling to, like Taiwan, Japan, Korea, or Europe?
Yeah.
Mm. Oh, oh,
Yeah. So Jamie, right, I think you talk about not having to work as soon as you can, right? So later we'll share with you, right, how this could actually assist you. Okay, of course, whether it replace fully not able to work, it depends on the initial budget that you are putting in, right? But later we'll share with you, based on this, right, how could it help you to drastically, right, reduce the need to work, because there is at a certain point, right, a kind of like annuity that's giving out from this particular account that will help you to reduce a lot of your expenses lah. Yeah. So I think that's why you were saying that you are Taiwanese. Which part of Taiwan do you used to be from? Okay. Oh,
oh.
so they are coming to Singapore to kind of like sometimes find you lah.
Ah,
Oh
you're
yeah,
in
Taiwan
Taiwan right
now.
now?
Wow. Okay.
Oh,
Okay. Okay.
wow.
Ah. Okay. Okay.台中的哪里？来埔里还是？Oh, Beitun, okay. Because I used to go to Taiwan, one of my favorite countries, when I was 21 years old, all the way to I was 32, right? Every year I go to Taiwan. Yeah, down lah. So
I
yeah,
still
yeah.
miss the food.
Yeah, I do have some friends. I do have some friends there as well, and they are from Taichung also lah. So one of my very best friend is from Taichung. She's doing 这个 brand 叫Giant Giant the bicycle parts one. So it's a very big. Yeah, it's a very big company. Yeah. So I mean, I know her through a friend, and we connected really well. So I know her family, and every time I go to Taichung, Taiwan, she say, hey, come by Taichung, and then she every time, right, very 客气, she hosted me and paid for everything. I also very paiseh lah, like kind of like that really like Taiwan very very 热情, right? Yeah. So to me, it's like, wow, I always remember Taiwan being a very hospitable place, because every time I go, well, all my friends, like be it in Taipei or in Taichung, right, they really like host us like their old family like that. Then I go there, I also feel paiseh. So every time from Singapore, I'll like try to bring a lot of stuff, right? Then I'll try to pass it to them lah. So you're there for like kind of like a holiday, or you're going back for a while. Yeah, correct.
Oh, oh,
Okay.
wow.
That's quite a bit of place, yeah, that you're going to. Okay, and so I think that's good. Thanks for sharing with us a little bit. So
Yeah.
sorry to interrupt you, because when you talk about Taiwan, I'm suddenly very excited already. Okay, so I feel sorry. Go back to where you are supposed to. Yeah. I mean,
Yeah.
I couldn't tell. I really couldn't tell.
Yeah. Do you grow up in Singapore, or
Yeah.
oh, no one?
Actually,
Wow.
one of my very good friends, right, which I know for about 16 years, she also grew up over here, but every year she goes back lah. So last time when I was much younger, during my poly days, I always followed her, and like she introduced me to a lot of friends over there. So that's where I got all my friends in Taiwan from lah. So yeah, but I thought it was quite good, because right now it's April. I don't know why. Usually it's a bit cooling, but right now it's like super warm over there. Like is it cooling?
Oh,
Okay. Yeah, because last week my friends are there, they were like in like very short sleeve and shorts. I think it's like looks like very hot like that. Yeah, but
Yeah,
So
correct.
okay. Sorry. I'm not sure you continue.
Yeah. So basically, some people also use it to make down payment for their own dream private property. And of course, I think what you are more interested in is actually this lah, to use this amount of money to supplement your pre-retirement lifestyle. So you can actually retire super early already. Actually, has an example on this which I can share with you later on. And lastly, of course, is for young parents or parents to be, they would like to use this for their own kids' education funds. Yeah, so let's say if you don't need anything, right, you can just leave it to grow as much as possible, up to $1 million also can. Yeah, so these are the pretty some of the good features of this account, right? So let me share with you what other things we have. So basically from the 10-year onwards, right, there's this thing called the free withdrawal, which means that actually from the 11-year onwards, you can do any withdrawal into your bank account, right? There is no hidden fee or charges, and it is very easy. All you have to do, right, is use our GE Great Eastern app, and then you pay now to yourself. So actually, it will usually go into your bank account. Let's say you withdraw 50K, this 50K will be inside your bank account within 1 to 3 working days. But let's say you are overseas, right? We also do a telegraphic transfer to you itself. Yeah, so withdrawal is very convenient and simple. Yeah, we also have this thing called the free fund switch from the second day onwards. And lastly, of course, the most attractive account feature of this account, right, is this thing called a welcome bonus. So how much are we looking at? We are looking at a very attractive and guaranteed amount of 40% of your first year savings lah. So what it means is, right, 40% of 12,000 is 4,800. So from day one, right, straight away, instead of seeing 12,000 in your account, you will start off with 16,800, which is very good to accelerate the growth of your account itself. Yeah, so let me give you a very quick summary. So basically, this is a 10 years account. After 10 years, you can do free withdrawal. We have this thing called a free fund switch. And now, of course, this is a high growth account, right? And we have this very attractive 40% welcome bonus over here. So do you have any questions for me regarding this account itself? Not really, yeah. So let me share with you, just now I mentioned to you how people use this to supplement their pre-retirement lifestyle, right? Let me share with you how it can be done. So basically from this 10-year onwards, you can do free withdrawal, ma. So let's say from the 11 years onwards, right? You withdraw for the next 20 years, a fixed regular amount of, let's say, 1,200 per month, which is 14,400 per year. So over these 20 years, you will have withdrawn a total of $288,000. And then you'll be very surprised to know that at the end of these 30 years, right, you still have 91,000 inside this account itself. So let's say if you think that this 1,200 is too much, you can actually reduce it to say 1,000 per month lah. Then you can actually withdraw up to 30 years and you still have 220,000 inside this account itself. So of course, this amount is very flexible. You can go higher, you can go lower, but of course, it will actually affect this lump sum you have at the end of the day. And then from here onwards, you can choose to continue receiving your monthly payout as a salary kind of thing, or to withdraw as a lump sum, you want to add in your next of kin, pass it to your family also can. So basically, this account is very flexible and customizable. But the good thing is you do not have to decide at this point of time. You can just decide when you wish to do so. Yeah.
Yeah. So, Jamie, I'll just summarize a little bit for you. 我用一点华语，用一点英语啊。So basically, right, for this itself, right, 它是利复利的啦，就是说 you can see that 它 compound, right, actually quite fast. This is based on 8%. We will 2 times at the 15-year and 3 times on the 20 years. So in fact, for our clients, right, the track record over 10 years is about 14 to 15%, which means to say the 3 times should come a lot faster. It should come about 13%. But of course, why are we showing you 8%, right? Because Singapore government, right, they are what we call, the lingo is called kiasu lah, or kiasi, right? So they will like, okay, maximum if you want to show consumer, show them 8%, but of course you perform more, the clients can get more lah. So the maximum that we can show clients is 8%, but we perform at about 14%. So based on 8%, something which is a bit more conservative, this is how long it will take, about 20 years to 3 times. But if you are like our clients, we manage for them about 14-15%, it's about 13-14 years, you will 3 times already, and that's what most of our clients are on track for. Okay, so for this itself, right, like what I'm actually showing you, this is based on 1,000 a month for a period of 10 years. Okay, so this is to be spreading your so-called your commitment into 10 years, because end of the day, some people, if you ask them, hey, you want to put in 120K straight away, it's a huge expense to them and they probably can't be able to do so. So therefore, we spread it out. So for this account itself, you want to go 500, 300, 400 a month, it's all doable, because end of the day, we want to make it comfortable for the clients, so they don't have too much cash flow going in. So if you are not taking out, this is what you will potentially get, which is the 2 times, 3 times within, I would say a reasonable period of time. But of course, if you are someone that say, oh, I want to work for 10 years, because right now you're 34, right? Maybe about 44, you want to kind of like semi-retire, right? Because your training business, take off, and it's bringing you some income, but at the same time you want to have a little bit more. So not sure, maybe you move to the second slide. So let's say you are 44 years old, okay? Basically, you are looking at taking out from this account, right, about 1,200 a month. Then this can supplement some other income also. Then of course, at the end of the day, at the 30-year mark, you can get a 90,000, and that can be for the rest of your life expenses and whatnot. So this is how usually people want to do. So either they leave it inside, they don't take out to compound very, very fast, to example 500,000 or 1 million, but if not, they could also on a 10-year start to keep drawing out already. So that is 2 methods which usually people will be doing. Okay, so for yourself, right, because I think you did mention, I want to retire early. So retire early usually means to say, oh, 10 years I want to take out as much as possible. Okay. But of course, for yourself, maybe based on this account, any questions first? If not, then I'll go very, very quickly into what generates that 8% for you. Very straightforward, right? Okay. So how do we assist our clients to get it at 8%, right? Very simple. We will then help them to, out of 40 over different sectors, identify which one to go into, because end of the day, it's the 8% that drives whatever the clients are getting, right? Okay, so I'm going to very, very quickly run into the slides itself. So basically, this is investments. Of course, I just want to share with you our clients' experience as well. So this is all from, our system. Okay, of course, I have to blank out the name now, because this is data protection in Singapore. Okay, so this client, about 1 year with us, you can see the duration he put about 1 year, 3 months. Of course, this is for a period of 10 years, but the client has been asked for 1 year, 3 months. The client's put in an amount of $2,000. So this is over here, 2,000 for 15 months already, 30,000 altogether right now. In one year, 3 months, we go into about 41,000. So this is a client that put in 1 year with us. Okay, so the clients that put in this, Mr. L client, this guy put in about 2 years with us, 18,000. This guy put in 80,000 for a year, a period of 2 years, 36,000. We grew it to about 56,000 already. Okay, so then we have clients for 3 years, because we want to show you some track record, right? So this is Mr. M, client for 3 years. This is approximately 3 years, 2 years, 8 months. Put in about 1,500 a month, 48,000. We grew it to about 65,000 already. Okay, so this is quite a good performance. All the clients we handle in the same way. Okay, means to say, whether you are putting in 500 a month, 1,000 a month, 2,000, 3,000 a month, or 50,000 a year, we handle you in the same way, in a way whereby we will discuss to you, but of course we will share with you based on our analysis. Maybe sector A, sector B is the best sector to go in. Then obviously, if you want certain things that's extra, then we'll discuss further. So this is Miss A, okay, that has been 4 years with us, put in 88,000, it's about 100,000 right now. Okay, so these are just a few clients' experience that I want to share with you, some of our track record that we are actually already doing. Okay, so of course, there's, like what I mentioned, many funds that you can go into. Of course, bonds is one of them. Okay, equity, mixed asset means to say a mixture of equities and bonds. Okay, but as of right now, technology, I would say, is the best to go in because of a recent dip that happened in the market due to Trump's policy. Okay, so if you look at the returns, right, they are very, very attractive. COVID period, we did about 44%, means to say, if you put in 10,000, that year you'll be up about $4,000. So 2021, we are up 18%. 2022, what happened was Russia-Ukraine war, interest rate spikes up very high. We are down 41%. But does it mean that we are down 41%? Later, I'll explain to you what we did in 2022. Okay, so in 2023, we are up 39%. In 2024, we are up 30%. Okay, so in 2022, what happened, right, was really, right, the interest rates went up very, very high. Then Russia-Ukraine war. So in March, I still remember when the market was down about 10%, we called our clients, say, hey, actually, I think the interest rate should spike up, and I think it's time to shift your assets from technology to either Singapore market, or if not, to bonds. So that year, actually, we shifted. We call our clients. Of course, not every client will want to shift, right? Some of them say, oh, I'm going to put long term. It's okay. I'm just going to leave it there. So the 95% that shift, that year, they only go down about 10%. So nearing to the end of the year, about November 2022, then we switched the clients back into technology, because at the point of time, interest they announce is going to drop lah. So that is where we will have the active management for our clients. So our clients, right, really can sit back, relax, and that's the reason why you engage us, right? When you are doing your own stuff, we generate the returns for you. But at the same time, if there are risks, then we will actually help you to protect the risk, because you can look at the upside, they are all not bad. Just of course we show you 8%, right? But you can see the upsides for the years that are positive, they are all relatively quite high. So what we want to be focusing on is how do we protect the client's downside, okay? So of course, right now, you could see year to date is -11, which represents a fantastic opportunity for you to be going into this sector because there is a discount. So example, I order the clients that if you're going in and you like these companies at $1. So what if these companies today are at 90 cents? Would you want to be getting a piece of this company at a cheaper rate? Of course, you probably want to lah. So what you can see over here, 5 years annualized and 10 years annualized, even though if you are a client that taking the full -41%, right, you are still doing on average per year near to 12 to 14% return. So this is on average per year. In the last 5 years, on average per year, in the last 10 years, on average per year. So these are the top 10 companies that we are going into, and you can see mostly, right, are semiconductors, 就是半导体 lah. So basically, TSMC is of course Taiwan, the long-term 老大. I'm sure you are familiar with this. Of course, we have other companies because we are very, very big on AI, okay, and automation. So these two, we are very big on it, which is why 4 out of 10 companies, we are on semiconductors. So the others are companies that I'm sure you are familiar with, Microsoft, Google, Apple, Amazon. So usually semiconductors, right, are a little bit more volatile. They move a little bit up and down a little bit more. So we balance up with a lot of all these very solid blue chip companies. So usually, right, if the clients say, oh, I full on technology, right, maybe one single sector, I a bit worried, okay, then we will then say the maximum we can go is we go into also 50% technology, 50% global equity. So what is global equity? We still have a lot of technology companies inside. These are the one that drive the returns, which are the very high returns that is giving that the fund is giving you. But inside global equity is a diversified sector. Means to say, other than technology, you have your example, your airlines, your F&B, your Johnson & Johnson, the consumer staple, your Nike, all these things inside. So we then balance up the risk that's involved. So of course, for this itself, you can see when the market go down, this is only down -18%, which is relatively much lower as compared to the technology just now. So we will do a handling for you. So I give you an example. End of last year, we actually told our clients, market is a little bit high, we shift a little bit more towards this diversified one away from technology. So we were proven right because in February, actually the market dipped a little bit. So right now we actually reverse back from safer, we go into riskier option into technology so that our clients can get sufficient upside when the market rebounds. So these are things that we will do with you. But of course, before doing that particular move, we will give you the call to say, hey, Jamie, these are the things that we want to do. Are you agreeable? If you are, then we will go ahead. So we cannot change without you not giving us permission. Okay, so these are the things that we will do for our clients. But of course, if you are very interested in, so you can see this is global equity, our risk diversified. Only 23% is in technology. The others are very well spread out. Like we have finance, we have healthcare, we have industrial, so on and so forth. So this is a very, very well spread out portfolio with, I would say, good upside but minimal risk. Okay, so other than this itself, right, the numbers, I just want to roughly go through the slides with you, right? So there are a lot of things that we'll go through with clients. Where are the billion-dollar opportunities? Basically, we'll have a lot of slides to go through with you. Basically, why is it in tech? Why is it in AI? Why is it in semiconductor? And why do we want to go in? An example, right? Why do we want to go in Microsoft? What are the products that is driving their return? The cloud computing, blah, blah, blah. So there is a lot of slides, but of course, for today, right, we will not run through all these. It's just to show you that we have a lot of research being done to put, in fact, we have about 50 slides. So if you're keen on it, second meeting, usually we'll run through a little bit of these. But of course, these are the fundamental analysis which is to tell you why are these companies chosen by us, and of course what is the opportunity behind. Then that is one thing. Then of course we will also share with you the valuation, because if you want to buy something like what I mentioned, you want to buy it on a good price, right? So we also share with you how do we analyze based on a 10-year basis, based on a 5-year basis, based on the 6 months, based on the last 3 years kind of basis, which are the sectors that you should go inside, and then why is there a compelling opportunity. So that's what we do for all our clients. So there is quite a couple of things that we do for our clients, because end of the day, 这些都是你们的 hard-earned money because you all really put out there and go and earn all this money. So what when you engage us, our job really is to create a win-win situation whereby you could make a lot more returns than where you are putting right now. okay? But at the same time, you can leave it to us. And then, of course, you can ask us any question that you want throughout the years that we're managing. But of course, usually, right, 1 year, about 7 to 8 times, we'll update you with, example, should we, if there's a news, should we move or should we not move? Or should we change? Should we not fund switches? All these are all free. And of course, at the end of every year, we will do a one-time review with you. Like usually about 1月、2月的时候啦, once after the year, and we'll say, did we perform more than the 8%? Okay, so example, right? Did we perform more than 8%? So I give you an example. If you go back to this slide, okay, last year we did 30%. We performed more than 8%, right? So it's very good, but of course, good 就不用讲太多啦, because obviously good, because we perform 30% as opposed to the 8% that we showed you, I think clients are all very happy. But of course, then we will share with them moving forward in 2025, what do we expect the market to be like? Do we still stay intact, or do we shift 30% out or 40% out, going to China, all these kind of things? We will be advising you. So your task is very simple, is to what we call dollar cost in monthly or quarterly or yearly. But what our task is that today you place the money with us. Our job is very simple. Our clients measure us by one matrix only, is can you make me more than 8% as what you have showed me? So that is something that we set out to do. And that is something that we, like just now, based on the results that we showed you, we have been doing it for a good couple of years already. And we are fairly confident that we can make you more than 8%. So in fact, our track record is about 14%. Yeah, okay. So this is where we are. So just wanted to see you have any questions, because end of the day, I'm sure you have some, maybe you feel you don't feel very comfortable with the risk, or you feel that, hey, maybe this horizon is not too long, but come to think of it again, it's also a little bit long. So if you have all these kind of questions, right, maybe you can take the next 5 minutes, you can just share with us. Then of course we could also answer you to actually see if those concerns can be resolved lah. Right, because sorry, you were saying the last sentence. Okay, yes, correct. In a way. So but CPF give you 2.5, we will provide more than that. So of course, usually don't move in a straight line. But typically, I would say you can see after all the up and down, right, we can still give you over the last 5 years, right, which include 2022. If you take on the full negative 41%, right, you are still doing about 14% on average. But of course, for our clients that are, like I say, negative, that year they took on negative 10 only because we switched out, right? Their 5 years on average is about 19 to 20%. So, which is fairly high amount, but usually we won't be out over promise clients lah, because end of the day, we just say 8%. If you like the 8% figure, right, typically you'll be very happy with what we will perform for you lah. Correct. So okay, so this 10 years, right, must every month must put in. Okay, so if you don't put in, right, then typically, right, they will give a 1 to 2 months grace period. Then, after that, they will run into something called what we call a premium holiday charge. So means to say they will deduct some charges from the account value, which sometimes is not so good because it will reduce. It's like you take 1 step forward, 2 steps back, right? So typically we will try to, we will have the client set on gyro, but right, if this is a 10-year, right, but if after the 8 year, on the 9th and 10th year, if you don't want to put in, right, actually you can put in, the returns will be about the same one. So that is a little bit of the gray area lah. A little bit of the gray area. Means to say the 9th, 10th. Correct. So it's fixed on entry. Like what Miao can share, right? Once you fix on entry, there will be additional bonus that you put inside. So instead of 100%, you'll get, example, 140% because of additional bonus lah that is going in. So it's a bigger amount, you can go it a little bit faster. So just like what you shared, right? Yes, it's a fixed amount for every single month or quarter or year. So depending on which mode of payment you choose. So usually we'll tell our clients, right? Go with something that you are comfortable, because obviously everyone 都想钱赚钱可以赚更多钱, but end of the day, we also need to take care of what is our expenses, daily expenses. We also don't want clients to overstretch as well lah, because end of the day, overstretch, right? Then 他们 stop in between, also not good for that, and that's not what we want to happen. We want to really at the finishing mark, right? Our clients tell us, good job. I really love working with you because I really make quite a lot of money from here lah. So that's what we want at the end of the day. Okay. Okay, great. So I think okay, yeah, sorry, your question, sorry to interrupt. Okay. So usually, right, what we do is very simple. We don't want to rush our clients into something, because, like example, even $500, 6,000 a year for 10 years is about 60K. It is I mean, all of our hard-earned money. It's not a small amount of money either. So usually we want our clients to go and think through to see if they have any further questions, because obviously for us wise, we are very confident with what we do. You know, the assets we manage, 80 million, we build up over time. And of course, these are the things that we take very good pride in doing to make sure that this 80 million, I will say in another 4 or 5 years, go into 160 million. So of course, that includes, example, the client's trust that they have with us, and of course, all the expertise that we hit. And of course, the team itself is not just myself and Miao Chun. We do have a big team behind that supporting us as well. So if for some reason, when you're in Singapore, you are keen, you want to come down, we do have all these meet the investment manager session, and kind of like once every half a year, right? Then of course, you're interested, you could come down to see the support behind also But most clients, they say, okay, never mind you know, I'll just probably leave it to you. But of course, if you're keen, you can come down, let us know if you're interested in that So usually what we want to do is that we want to give our clients enough time to think through, you know, what is a comfortable budget that's for them. Then of course, you know, like I say, check-in meeting, I'll be sharing a lot more on this. If you're keen on this, we will be sharing with you, you know, why this particular company, example, why do we choose, example, Apple at 9%. We will share with you exactly why we do that as well. Okay, so these are usually in the second meeting So typically we will say, you know, right now I know you're in Taiwan for kind of like a Qingming, and also to spend time with family. So usually we will catch back with you either in 1 week's time or even after your family time in Taiwan, because we also don't want to interrupt you too much. Okay, so at the same time, we also want to be doing a few budgets out for you, so that at the second meeting, it will be a bit more efficient on your time So we don't go into the third meeting as well. So usually for this itself, right, just now what Miao Chun show you is 1,000 a month. Is that something you're comfortable, or actually a lower budget is actually something that is more comfortable? Just off your mind, it's easy yeah. Yeah, fair enough. Okay. Okay, I think fair enough. So maybe what I will suggest is like that, right? While you're working out your finances, we will do example based on let's say the next time that we meet you 500 a month, 800 and 1,000. So I think we just work around this range. So of course, you have other specification, you can let us know at that point of time So at least we can do out some figures, we'll show it to you. Then at the same time, you can do a bit of research, chit chat with your family. You know what you feel about this meeting. Of course, you have more questions, you can let us know again So maybe what we'll do, right, is that today is a Wednesday. You'll be coming back to Singapore like 2 weeks from now, or maybe next week you're back. Or about 2 weeks from now Okay, so maybe what we'll do, right? Let me have a look. Maybe on the 21st. How does it feel? Maybe tentatively we'll just set at 21st, maybe in the morning, maybe nearer to the 17 to 18, we give you a call again to fix the timing up Can up. Okay, so 21st is a Monday. Tentatively, we just put it about the same timing at 10 o'clock, 21st of April on a Monday at 10 o'clock. Then about 16, 17, we'll give you a call to see your availability, because we also don't want to disturb you too much during your family trip. Then from there, you know, let's fix up. Then of course, I'm sure you have more questions. We can handle those at the second meeting itself. Can? Okay. So I think that's all from myself and Miao Chun. And of course, Jamie, thank you so much for taking out the time to go through this with us, especially, you know, during your Taiwan trip with your family. So we really appreciate it. And of course, I hope, you know, we have kind of like value it to you, and also, you know, showed you that maybe investments need not be that scary in terms of the volatility, but end of the day, I think it's about managing it well and also have a team to do it for you, so that you can release time to do what's important to you, like your trading business and of course your family business as well. Okay, so of course, thank you so much. You have a great Wednesday and rest of the week ahead with your family, and of course we will talk to you when you are, you know, available back in Singapore Okay,
Okay
thank you so much, Jamie. Okay, take care. Okay, have a good trip. Bye bye.
Bye bye.